Hey everyone, welcome to Mortgage Talk TV with your host Dave Orban from Mutual Omaha Mortgage, NMLS number 832451. This is episode 8, and we are going to cover costs that are not mentioned when buying a home. All right, so we've kind of been over some pre-approvals, down payments, everything like that. I want to talk about the other costs that are involved when you buy a house. Because there's a lot of things that aren't discussed with buyers, and they get hit with these kind of questions or other expenses that they weren't aware of, right? So two of the biggest expenses that you're going to have is for an appraisal and an inspection on the property. All right, so these are fees outside of your down payment and fees that are gonna be on your loan paperwork. What's gonna be on your loan paperwork is the start of your escrow account for your new mortgage, your down payment requirement, depending on what program we're doing, either 100% financing, 3% down, 3.5% down, 5%, or so on and so on and so on. All right, the other fees are gonna be your state recording and your state transfer taxes, and then also your county fees and your title work. So those are all fees that are going to be on your paperwork. Your appraisal fee will be on your paperwork, but that is a fee that you're going to pay out of pocket. So let's go with the appraisal. The appraisal could be anywhere from $400 to $800. Sometimes it could be even more depending on the size of the home, the complexity of the property. But let's just state it's $400, right? Your inspection could be anywhere from $500 to $1,000, depending on what's needed in the inspection. To give you an example, and obviously I got some stuff going on, but that shouldn't have been caught under inspection because it was underneath drywall that they would have never saw. But we did have roof issues that should have been caught on our inspection, and that cost us a lot of money after we actually bought the property. But to give you an example, on an inspection, we paid about $500 for our first inspection. We had an inspection done, and we had to get a list of items fixed when we bought the home. We had to get an inspector back out, which cost, again, another $500 or so. So you're talking about $1,000 that we paid for that when we bought our home, and then we paid about $450 for our appraisal. So there's, let's just say, $1,500 that my wife and I had to pay out of pocket. Those are fees that the bank's not covering, the seller of the property is not covering, and your realtor is not covering. You have to have that either available credit or cash to pay for those. So when I take a call with a borrower and they say, the first question I'm going to ask you is, how much money do you have in your checking and savings? If you tell me $1,000, I'm going to advise you to not buy a house right now. I'm going to advise you to step back for a second, and I'm going to try to explain all these fees to you and what happens when you buy a home and what happens if your air conditioning goes up. You don't call the super of your house and say, hey, my air conditioning up, come fix it. You unfortunately got to pay for that. Now, there are some insurance and home warranties that you can get, but these are all other expenses. So when I have a buyer that says I only have this much money, my goal is to educate them on saving more money and getting more ready to be a homeowner. I may shoot myself in the foot a good deal, but I know that when I go to sleep at night, I haven't made someone house poor. And that is my ultimate goal. And that should be your loan officer's ultimate goal, to make sure you have enough money to afford your house and really make it work within your budget. Not only on a monthly level, but if something happens in your house, you shouldn't be scrambling to be able to fix it. Again, AC goes up, you pay for it. Refrigerator goes up, you pay for it. Stove goes up, you pay for it. Roof starts to leak, you pay for it. Again, there's a whole bunch of home warranties and insurance and stuff like that, but they still cost money, and they still cost money monthly, and there's deductibles and everything like that. So again, getting back to the main point at hand, there's a whole bunch of different programs out there to limit your down payment and keep your expenses very, very slim when you go to closing. But to get to closing, you're still going to need about $1,000. That is kind of the median number that you should have. Again, that's going to cover your appraisal and going to cover your home inspection. But after the home is yours, I don't want you to be out of money. I want you to have another $1,000 to $3,000 or, hopefully a lot more money in your bank account, that if something goes wrong with that home after you buy it and it's officially yours, that you have the money to go ahead and fix it. Again, just a quick note, I want to keep pumping these videos out. Please like, please share, please ask questions so we can get some more dialogue going. I'll keep coming up with topics because there's plenty. But again, save money before you buy a house. Have about $1,500 to $3,000 on hand, ready to go, plus your down payment. So $3,000 plus. That will get you in really good shape to know that when you own that home, you're not going to run into issues. You're going to be able to afford the house plus afford anything that goes wrong. Or at least, be able to make some down payments and stuff like that. All right. So again, Dave Orban, Mutual Omaha, Mortgage Talk TV, episode 8. Again, it's December 20th, about 4 o'clock. It's a miserable day outside. So hopefully the weather gets a little bit better, and please stop. Don't mind those. Hopefully in the next couple weeks, they'll be fixed. Thanks guys. Bye.